Hello everyone, welcome to the channel of Trigonometry. Today is Friday, February 13th. I wanted to make a video today and talk about what has happened this week in the market. Let's take a look at my P&L for today. Um, my account was up about 2% today, mainly benefited from Robinhood stock today. This is my 1 week performance up around 2%. This is my year to date up about 8%, and my all time 470%. And this is my Roth IRA all time up 3,800%. Year to date 46%. 1 week 8%. Today, I did not make any trade on this Roth IRA account. I'm pretty happy with what I've been doing this year so far. Everything's going according to the plan. I've always shared my plan to my Discord channel with my members regarding what I'm going to do, and I share all the trades and send out alerts to all my members when I make those trades, when I open the trades, and when I close the trades. So those all worked out very, very well, especially for my IGV puts and QQQ puts. Those were the big hitters this week. So let's take a look at the market. Let's start with the Max 7 stocks. Microsoft stock formed a clear double top last year. Um, August, the first top in July last year, and second top in October last year. And since it broke down to this 494 neckline, it went from over 550 all the way down to now below 400, and now it's right around 400. And as you can see, it filled this huge gap, got all the way down, 395 gap fill. And then we get a little bounce, and then we continue to pull back. And unfortunately, we are already below this big uptrend since 2022 low. This is 2023 January, and this is 2025 April. So we draw this line all the way across. Um, Microsoft stock price has fallen below this big uptrend. So this is getting worse. And now let's look at Amazon. Amazon stock topped in last year November, and then this year it tried to break up, failed, and tried to break up again, failed again, and then after the earning came out February 5th, and you see this huge gap down, and stay below this 212 neckline, retest again, and then pull back. Now it's below 200 level. I think Amazon stock will also continue to pull back, especially given it's not be able to hold this very big uptrend since 2023. This uptrend has been intact for almost 3 years. Now it's broken. It's breaking down. It's not good. This is pure technical analysis. I just share what I see from the chart. Now let's do Meta. So relatively better than Microsoft and Amazon. It's still holding this uptrend, but as you can see, the earning gap up. It had a great earning. It gapped up. It was not able to fill this previous gap down from 754. The high was 743 here. And then since the earning, it continued to pull back and fill this gap entirely and then pull back even more. It kept dropping. And unfortunately, I don't think this upward trend line would hold, most likely. It may get a bounce here or there, but I think very, very likely it's going to follow what Microsoft and Amazon is doing right now. And I want to talk about Google. So Google is probably the strongest among these other stocks. Uh, right now, it's still holding this top at above $300. This candle is the earnings candle. It gapped down and trying to pull back to fill this gap and did fill the gap. However, it's slowly bleeding and dripping down backward back towards the low end of the screen candle and it's breaking down. Looks like it's going to come down, retest this previous consolidation area, which is around 277, 275 to 290 area. And it's probably gonna be aligned with this upward trend right here. Hopefully, it will be able to hold this 270 area when it pulls back. I started with these four stocks because they all share one common characteristics, which is that they all show in their earnings they are massively increasing their capex spend on AI infrastructures. Amazon is going to spend around $200 billion in capex. Google will be spending around 170 to 180 billion dollars in capex in 2026. Microsoft, I believe, will be spending 120 billion plus in capex, and Meta also spending 110 billion in capex in 2026. So just these four hyperscalers will be spending over 500 billion capex in 2026. This is a huge, huge number. So in the past, they will be able to enjoy the price premium because they were asset light and they were spending huge amount of money in stock buybacks because they have the best cash flow of all. But now they have to spend all this capex to build their AI data centers, to buy these GPUs, to build their own chips. So they will not be able to sustain those stock buybacks, which is the big reason why they were able to compound their stock revenue. They were able to compound their stock and their earnings per share year over year. I believe this is a turning point for these hyperscalers because they're fundamentally changing their business structure in terms of capex, in terms of cash flow, in terms of asset structure. They are becoming more asset heavy instead of asset light. I think all these stocks will be re-rated by the Wall Street because of this fundamental change. So I believe all these four stocks I mentioned will keep going lower because of the capex and diminishing cash flow they were going to experience in 2026. I believe they will be underperforming the stock market in general. Initially, when I heard some analysts saying that the hyperscalers will be underperforming the market in 2026. The small cap and mid cap will outperform. Initially, I didn't get it, but after I did analysis, after I hear their earnings, now I get it. Now I understand why they will be underperform. Now let's look at the rest of the Max 7. Let's look at Nvidia. So supposedly they should be the primary beneficiary of all these AI capex spend, right? You would assume that their stock price should skyrocket. However, their stock price has been flat for the past 7 months. 7 months is a long time for stocks. Yet they will not be able to break out of this consolidation area. They made high of 212 in October, and they will never be able to go back to above 200 ever since. They had tried multiple times, and each time they were failed. The closest was like 199 here, and then we got to 196 here, we got to 194 here, and then just each time it seems just could not get past this 200 level. So from a purely technical standpoint, it's because large institutions are selling. That's the only explanation here. Otherwise, if you just look at their earnings, their EPS, their valuation, Nvidia is probably the cheapest Max 7 out there. They're still growing around 60% revenue year over year. There's no reason for their stock to go flat for 7 months. I believe if we use their historical earnings multiple, they should be trading at around $300, but they're only trading at 180. That's a huge discount. But you ask why? Why, even after all these capex spend, they're still trading at 180? That's also my question as well. I couldn't understand why Nvidia is still trading at this level. And from technical standpoint, if we cannot break above this 200 area and we keep coming back down, and at some point if we start to break below 165, this could get ugly because after this long 7 months of selling, of institutional selling, possibly it could go much lower. It could go below 150, I think, even to 115 right here. This is the basically the next support at 115 if it goes below 150. I'm not sure why. If you know why Nvidia stocks just keep going flat for the past 7 months, please in the comment section below. I'd be really interested to know. And now let's take a look at Apple. For a period of time, people are praising Apple for their discipline, for not overspending on AI capex. But just in 2 days, Thursday it dropped 5%, today another 2%, 7% down in 2 days. What happened? On the surface, the news was the Siri feature will be delayed again. 7%. I don't think that's the main reason. But when they decide to dump this stock, it's gonna turn really, really quick. Others say they will have a lot of margin pressure because of the high memory cost. That's already known for a long time. That's not new. So what else? Why is all of a sudden it's getting dumped? From technical standpoint, it's getting dumped for one reason, because some big institution decide to sell Apple. It's that simple. So um, I'm not even trying to justify why they're getting dumped in the past 2 days. And from the chart, not looking good. It's trying to forming this double top here. Looks like it's trying to come back down to retest the 240 area. And Tesla. So Tesla is a very interesting stock because of their CEO Elon Musk. It has so many topics. It has FSD, it has Optimus robot, the Tesla cars, their factory, their battery, um their solar panels, whatever. They have so many stories, and Tesla is obviously the most expensive Mac 7 stocks. It's trading like 200 times PE, but Elon Musk is always be able to sell his stories to the public, and it's trading at a very, very rich premium compared to the other companies. And this is also very, very dangerous because it's also looks like it's trying to forming some kind of top, and it's uh, this was last year September. It broke out of this neckline around 384, and it went all the way almost touch 500. At the moment, you think it's going to break out of 500, but unfortunately, it pulled back again to retest this 380 area, and it's been basically consolidating for quite a long time, almost 6 months. If this starts to break down, the next support is 300 area. This is one of the stocks is very, very difficult to analyze it because it's just purely momentum driven, and retails love this stock for many reasons. And institutions also love this stock because there are a lot of retail loving this stock. When a stock has a lot of retail hype, the institutions can take advantage of it in their own ways, if you know what I'm talking about. That's the Max 7. Actually, none of them look good right now. So I think 2026 is the year that the Max 7 will underperform the general market. It looks increasingly possible that all Max 7 stock will have even larger pullback in 2026. And let's take a look at S&P. We have been going sort of flat since November last year, and we keep consolidating in the same area, and we will not be able to break above 700. The high was 697, I believe. You can see this first pullback into 650 area and a bounce, and then the smaller bounce, and then a smaller bounce, and start to going flat and drip and break down. And then it tried to retrace back to retest the high and not be able to break out, and then coming back down again and bounced again. We are right at the 680 support. I think this is very, very dangerous. It's basically hanging by a thread. It's almost trying to break down immediately. I am very bearish. I remain bearish um, because uh, of this current setup. Once it's breaking down this upward trend line, it tends to keep going down to find the next major support. The next major support is either the 650 area or this 620 area. If we can hold this 650, good. We can bounce from here. But if not, the next level is 620. We still have a quite a way to go from here. And if we look at QQQ, very, very similar story. Same trend line. Bounce, bounce, bounce. Flat breakdown. Retest, breakdown. QQQ looks a little bit worse than SPY. It pulled back. It's already breaking down the 600 area. It pierced on Thursday last week and then tried to bounce and then pull back again. It pierced 600 again today. It's much weaker than SPY. It's also because it has even heavier exposure to the the Max 7 and the software sector, which has been very, very weak lately. So it really impacted QQQ in a major way. And very similar setup to SPY. In my estimation, it should go come retest the next major support, which is I believe the 580, or if it doesn't hold, it could be 152 or 536. These were the major support next. Where will we find the bottom? I don't know. We'll see when it comes to that point. But at this moment, I'm still remaining bearish. My general trading thesis is to short the pump. So if we bounce next week, I'll keep shorting all the way down. So as you know, I've made a lot of money this week shorting QQQ and IGV. And let's look at the IGV as well. It's complete breakdown, completely broken down. I don't think it's bottom just yet. I think we'll at least retest this 77 line, maybe even pierce below to flush out all the remaining bulls and then pull back. That's my that would be my expectation on IGV. So, but obviously it may not happen in that fashion, but that would be my base case for now. My other observation is that despite having great economic data this week, we'll still not be able to hold. So on Wednesday, we have a very good non-farm payroll number came out, was way better than market expected. We gap up and then all the way down. And we bounced and next day small gap up, another big down, big sell off on Thursday. And then we try to bounce again on a good CPI number and very weak bounce on the SPY. Start to curve back down after lunchtime, basically closing flat today and very similar for QQQ. Wednesday gap up, down, pull back and down again, and went down below 600 and bounce, and after lunchtime come back down again. Very much flat. Small cap is relatively better. Even if they have a similar setup, but you can see the bounce is much stronger than SPY and QQQ because it doesn't have the exposure on the Max 7 and the software companies. Uh, that's good news for IWM. But I do believe we may get a larger pullback before everything stabilizes and start to bounce again. Also, it's usually a very weak sign when the stock are not be able to hold the gains on good news, meaning the institutions are selling. The institutions are dumping their stocks onto the retails. The retails will be left holding the bag for a little bit. Um, so be very careful of what stocks you have. If you're in the wrong stock, those may not even recover when the market bounce. If you hold the good quality stocks, they will bounce back. So I think this is a good time to check your investment portfolio to actually take a closer look of what you're actually holding. Do you fully believe every stock you're holding is your high conviction holding? I think this is the time to filter out all of the speculation plays and your non-high conviction plays out of your investment portfolio and reconsolidate your capital and set some cash aside so you can have extra capital to buy the dip. That's all for today. Thank you. If you have any questions, comments, please leave in the comment section below. And if you wish to join my Discord channel, please check in the description below. And I'll see you next time. Bye.